Hello everyone, welcome to another episode of Personal Finance. Today we're going to take a look at Backdoor Roth IRA. I had briefly mentioned about this in the previous video, but we're going to go into details how to do it, what you need to be aware when you do it. It is important you watch the video until the end to avoid the common mistakes people make when they do the Backdoor Roth IRA conversions. Before we go into Roth IRA, just to recap different type of accounts that you might have for retirement. The typical one is 401k if you're working for an employer. Within the 401k, you might have two options. One is pre-tax, directly contributing the amount to your 401k, and then the taxes are done after the contribution. Most employer might also have the Roth 401k options where the money that's being contributed is after tax money, right? It's post-tax money where the taxes are deducted, then you contribute. The second one is called Traditional IRA. This is typically done using your post-tax dollars, but you do get tax deductions. And it's based on your income limit. It starts phase out after a certain amount. If you're a high income person, then most likely you will not get any tax benefits, right? You can still contribute to your traditional IRA. There is no income limit in contributions. Whether you get tax deductions for those contributions will depend on your income limits. And those are published in my previous video. The link is in the description. And the last one is the Roth IRA. Again, Roth IRA also has income limits. If you are married filing jointly and your modified adjusted gross income is 237K, $236,000, then you can directly contribute to Roth IRA. You don't have to go through the hassle of backdoor Roth IRA. So if your income is less than $236,000, married filing jointly, then you can directly contribute to your Roth IRA, $7,000 if you're less than 50 years old, and another $1,000 more if you're above 50 years old. But let's say you are a high income earner and your income is above $246,000, married filing jointly, right? Modified adjusted gross income. In that case, you are not eligible to contribute to Roth IRA directly. Why Roth IRA is important, right? So the money that you put into the Roth IRA, it grows tax free, right? And then when you withdraw, it's also tax free. So in retirement, you have a lot of flexibility. You have a big balance in your Roth IRA. The money that you take out from Roth IRA does not go towards your income, and there is no taxes on that. So it's important that you start building your Roth IRA bucket as soon as possible. If you're a low income earner, then you can directly contribute. There's no income restrictions. But for high income earner, that's where this backdoor Roth IRA comes into play. So with that, let's go into how you do it, what are the steps, and how to make sure you avoid the common mistakes, right? First, you need to have a traditional IRA account, and you also need to have a Roth IRA account. So step one, you would contribute the maximum allowed for that particular year or whatever amount you want to do it, right? It has to be below the maximum allowed. Let's say you want to contribute $5,000 for this year. You would transfer that money to your traditional IRA. Once the money hits the account, you can then move your money from a traditional IRA to Roth IRA. I personally like Fidelity. It's much simpler, easy to do it. So all you have to do is have your bank account set up, transfer the money, and the next day when the money is there, you just move from one account to another account. So that is step two. And the key thing here that a lot of people make mistake is you need to file a form called 8606, right? That form informs the IRS that you did a backdoor Roth IRA conversion, and there is a calculation called pro rata rule, right? It is important that you do not have money in your traditional IRA, your rollover IRA, your SIP or simple IRA, right? That calculation will impact your amount that's considered as non-taxable versus taxable. Ideally, those has to be zero when you do the conversion for that particular year. You can do the conversion in January, but the end of the year, December 31st for that particular year, you want to make sure your balance in your traditional IRA, rollover IRA, SIP, and simple are zero, right? So there is a link in the description that goes into detail if you need to know what it is in terms of how to avoid this pro rata rule, right? There is a YouTube video. And there's also a link to a blog post that goes extensively into this, right? This would be, I would say, a common mistake a lot of people may not be aware of. They do the Roth IRA conversion, and when they file the 8606 form, that's when they realize that they made a mistake. So it's important you try to avoid it. If you don't want to go through all the hassles, say, of filing the forms and other stuff, you can just continue the traditional IRA route. But once you start doing it for a year, then you know what exactly you need to do, right? So it becomes much simpler for the following years. The other key thing also I want to highlight here is you're not doing anything illegal. The process that has been outlined is the legal process, even though it's called Backdoor Roth IRA, it's being followed by multiple people. IRS is aware of that, and the steps has been outlined by multiple people, and I personally have been doing this as well. So just to be aware, it's nothing illegal here, but you do need to be aware of the pro rata rule so that you avoid paying additional taxes. So if you have any questions, do let me know. And it's important you look at the link in the description to make sure you understand what account balances needs to be zero, right? It does 401k, solo 401k, those don't bother. But if you have a traditional IRA, rollover IRA, SIP, or simple IRA, then those balances has to be zero before the end of the year, so you can avoid this pro rata rule. But if you start doing it every year, let's say if 7,000 is what you want to do, it keep adding it over a period of time, you can quickly build up your Roth IRA bucket. Again, this is for high income earners. If you're a low income earner, then you can directly contribute into your Roth IRA account. It doesn't have to go through the additional steps that's required. Thank you. Let me know if you have any questions or feedback. Thanks. Bye.